Good afternoon, everybody. Welcome to yet another edition of 18 Minutes with 180 Markets. You know, one of 180 Markets' key themes is that you must invest into secular growth megatrend stories. And one of those trends out there that you may or may not be familiar with is what's known as KYC, AML, or even more. And what it stands for is knowing who you're doing business with when it comes to financial services. And frankly, these are all the annoying forms that you may find when you apply for a credit card, apply for a home loan, do any type of financial transaction. It's all about knowing your customer. And this trend started after 9/11, increased even more after the GFC of 2008 and 2009, and it's not slowing down anytime soon. Well, instead of just getting annoyed, why don't we try to make some money off this trend? And to that effect, we have a company with us today, CV1, and their chairman and managing director, Rod Sherwood. Rod, welcome to 18 Minutes with 180 Markets.
It's a pleasure to be here. And just for everyone's benefit, I'm the CEO and on the board of CV Check. I don't chair it.
Okay. Thank you for that clarification. Rod, maybe start out, just talk a little bit about your personal background. How did you get to where you are today?
Well, like many people, I've got qualifications which allow me to travel the globe in my profession, but it wasn't really that. Those came along during my travels. So my wife and I worked in Australia briefly in our youth. We then, at the age of 30, bought one-way tickets and went to London. Didn't have jobs, had about 6 weeks' money to live. And we then set about getting ourselves some kind of job, and our plan was really to work and save money over the course of a year, then do the classic Australian thing, jump in a van and travel around Europe for a bit before coming back to Australia. Well, we sort of, about 6 months in, decided to ditch that plan, stay in Europe. We ended up there for 17 years. So I worked in Switzerland for a company called Reed Elsevier, listed on the ASX, listed in New York, London and Amsterdam, and ended up running their global treasury during the time where they were transitioning that company into a data-driven business of must-have information. They did that between the mid-90s and the GFC, and it's now one of the big global companies that's super relevant today on the internet. A fantastic business, and it taught me a lot about the things that we need to do in our business. Came back to Australia in 2010. We built our home here, and then these guys from CV1 walked up my driveway basically and said, "We've got a really big idea," and here we are 10 years later.
Amazing, amazing. And obviously your background, though, taught you a lot about the power of data, analysis, metrics, and so forth and so on. And I guess, you know, for our audience that may be familiar with the terms AML, KYC, and how does that relate to your business, because there's obviously a lot more to it than that. Can you just explain maybe at a high level the industry, and then also, you know, how does CV1, you know, fit into the whole scheme?
Yeah. So if you think of people and people risk management, which is really our arena, our big arena, really this comes about from way back even in the times of slaves and when you look at horses. Essentially, if people were working in the fields, within 2 or 3 days, you could pick up, were they going to help you in your agrarian setting to cut the wheat, load it onto the cart and get it back so you can start pounding it out and turning it into flour or whichever you do. But in the last century, there's been this decades-long shift to services. We've gone through manufacturing and industrial manufacturing, which has largely been automated. And now there's service provision, and it goes to all levels of the economy. You think of us, we're in financial services in some way. And in that, there's people need help managing their wealth. It's a complex arena. You can't invest just in Joe's bread shop down the road. you've got a global reach to where your investments can go. And not many of us are pure technologists, so it's hard for us to understand that. So we end up with intermediaries like yourself. And in working with those people, there's an inherent issue that you've got to face down, and that is trust. Do I know this person? Do I know their capabilities? Do they have a proven track record? And therefore, I can trust them to follow the rules which govern how they manage my money. So at CV Check, where we work is in people risk management. So at a very core level, the first thing we do is get identity confirmed. We go to a very high standard of identity to link you with the person that you're representing to be. So we look at passports, driver's licenses, photos, a whole bunch of history. From there, we have essentially a digital identity, which is inside CV Check. We create a dashboard for you, and then we go out and prove up facts about you. So one of those things is in the KYC process, that's know your customer. So we identify you, and then we also prove up certain facts about you that may be relevant for employment or compliance reasons. In your case, I imagine you've got the AFSL, so your financial services licensing. So you'll get bankruptcy reviewed, criminal history, we'll look at your credit records, and perhaps your professional memberships of whichever association you're in. We will supply those to you in digital form, which you can then use when you apply for your license with the regulator. So we can serve that to you. So first we get your identity, we confirm that. Then we prove up these other things about you, and you then are able to share that with the regulator to comply with the rule on how to get your license. From there, you then go out hunting for clients and serving them and hopefully making them rich, and you clip a fee on the way through. Simple as that. But imagine that through the broader economy into areas of safety and teaching and hospitals and so on. There's all these facets of compliance that are there, and we enable the companies to and people to actually do that readily, easily, and plug it into the regulators.
Right. So said another way is that KYC is actually a very, not, I wouldn't say small, but it's a piece of the puzzle of the overall compliance arena. And this is, again, a mega trend in the investment world that seems to, as you said, it's been going on for hundreds of years, but in a digital format, if you will, it's certainly taken another step up.
Yeah, and it's harder to see a person like you. I can see you,
right,
but I can't see your capabilities.
No,
at face value. I have to go and prove them. Yeah,
right. Absolutely. And then, Rod, drilling it. So now we understand a little bit more about the industry. About CV Check itself, can you just walk us through the history? You floated in 2015. Just maybe start out, or where you were and how you've gotten to where you are today from a business perspective.
Yeah, sure. We started out so we say in 2015. That's when we listed on the Australian Stock Exchange, and the code is CV1. Prior to that, we had gone through a series of technical developments around workflow automation, and we picked up some AI elements as well along the way. Essentially what we built was this framework whereby we could have an individual who's at the core of this information. It's information about them. We would identify them, load up their digital credentials that we verified, and then they would be able to share them across to employers and regulators. So we built this three-way embedded design principle around privacy and control of individual information. Then we had to couple that with what's the end commercial need. The end commercial need is essentially proving identity, confirming that people have the qualifications and things that they have, and then getting those digitally shared in a way that's secure. And it has utility already in the marketplace because regulators need it, people need it for health and safety reasons, etc. So we had that there, and we then had to take what was to that point a fairly small commercial proof. We're doing about $1 million turnover, and broaden our reach across Australia and also into New Zealand so that we could scale it and prove it further. So in the 4 years since, we've done that. So we acquired a business in New Zealand in 2016. In parallel, during that same year, we were advertising and establishing our brand so that consumers and businesses became aware of us. As we had closed on the New Zealand acquisition, we also realised that the recurring revenues, the core drivers of recurring revenues, were really coming out of B2B customers. So we pivoted our focus to B2B, and then we set about growing our recurring revenues. And through 2018, we did that. We really found our licks in 2019 and got good growth. And we reached the point where just pre-COVID, we had 10.2 million of annual returning revenues. And it was coming from a broad client base of around 7,000 repeat B2B customers.
Wow. So
really, really broad. And they range from very large enterprise to small to medium sized businesses. And as a residue part of that and our work there, we also get referred B2C clients. So we're seeing around 10 to 15,000 of those per month as well. So a very broad reach of business. As we've gone along the way, we've learned a lot more about the business. So we've automated more and commercialized and really proven up a big solid model. And I think we're right at a point now of inflection, which is really quite interesting. But, you know, we've still got work to do. Still not that big yet.
Yeah, you know, so many questions. Can you just give maybe on the B2B side, though, an operational example of how, you know, company XYZ or whatever it is would actually incorporate your product?
Absolutely, yeah. So several years ago, we won through a tender the account Optus, which is a large telecommunications company in Australia. And they have a significant ownership out of Singapore. Mm-hmm. So this company, they have a lot of employees and also have contractors. So for this company, what they had was HR teams, partly in India, some in Singapore, and then spread across Australia. And they had fairly complex needs. So some of the technicians have high capabilities which they've acquired over many years. So in their case, they needed to identify the people in each role, and these roles were many and varied at a large company. And then they had to prove up their capabilities. So some of them would have done certain certificates, say safety certificates ongoing. They will have done technical training in electricians' work, but then had to upskill into fibre optics and routers and etc. And then there's the other side of the company, which they're also running essentially a consumer business. People go in and buy mobile phones, and those things are worth a couple of $1,000s. So you have a retail arm as well, so different set of needs there. Then finally, there's the finance team. You know, so the finance team are handling all these payment flows, which are fairly large. So it was a company of wide geographical dispersion, quite complex layered structure of personnel with very diverse role types. So they needed to build and construct a framework which said, these are the capabilities we need. We could tell them the capabilities that people have, and then they could map and see what their gap was, close that compliance gap through CV check, proving up information, both as people were employed, but also as they evolved. So every 2 years there's a rescreen and they would need to check something was done. So this company came on. First, we had to build the relationship of trust through work. So about a year in, we could see that that was happening. And then we saw that they embraced CV Check as a technology partner. So they wanted to try out a robot for some of their work and automate it. And we worked with them to teach the robot how to do certain things. And we then adapted our workflows to work with the robot and flag up issues that a human needed to look at. So we've evolved that relationship now where we had a small part of their business initially, but it was important to us. And then we've evolved it out to include contractors and retail arm and franchise holders. So now it's a big, deep, broad relationship where CVCheck's very embedded in the back end of their technology. And as a result, they're able to manage their people risk framework using us as a partner. So it's a really good way of how we evolve in large enterprise to help them drive forward and make these compliance needs less intrusive for each of their people.
Yeah, no, that's right. That's an incredibly helpful example of now, I think that the audience really would have a true understanding of your business and the capability. Also, turning into the numbers, obviously, as you said, with Optus as an example, it was about a year in that the relationship really hit its stride. And on the financial side, the metrics, it seems like a lot of the costings that you've put into the business are backwards looking, maybe in 2015, 16. And now we're at the point where we're really going to, get that reward, that upswing. Can you just discuss the financial metrics of, not so much where we're at, but where we're going?
Yeah, where we're at was basically a product of the past. So we had to establish our brand and also get to know things as a listed entity. So we burned through something in the region of $9 million in FY16. We're now down to relatively neutral. So it's been a gradual progression, but each year we've improved.
Right.
And now we've positioned ourselves such that we can be relatively cash neutral through the curve. But we've also brought on a growth team to accelerate on these things that we know now. Our B2B side of our business is really strong, and we're looking to hockey stick that up from here. So the way that we've done that is first we concentrated on our direct go-to-market, where we go to B2B customers and we serve them. We build out these frameworks and we end up with selling checks to them in bundles to help them manage their people risk. And that got us a long way down the track to break even. And then more recently, starting about 3 years ago, we piloted the idea of also moving CVCheck into an integration model so that we could integrate with HR technology partners where companies with these broad workforce management needs were already working. So they had their workforce managing their people through these platforms. So we said, okay, well, what we could do though is we're a full service screening and verification company. We could create a cloud-based service, a microservice that is background screening, that those companies can pull down and plug in through integration and embed ourselves into the back of those platforms such as SAP SuccessFactors, Workday, PageUp People, and the list goes on. We have now
big HR platforms,
yeah. And so we started that in 18, got a little bit of traction. 19, we said, right, now let's pre-commercialize this and prove it, which we did in 19. Then in FY20, we doubled it again. So that's now got to the point where we just finished the year. We're over 600K worth of revenue coming from that stream. It's accelerating. It's doing the full hockey stick. And even as we went through this COVID-19 quarter it ended in June, we saw the take up there with new integrations being built really accelerate. And right now we're seeing big hockey stick moves in that. So it bodes really well for that particular strategic initiative. It's taken some time to prove it out, commercialize it, and get it to really accelerate. But now we can see the potential of it, and it's really helping us win in the marketplace.
Yeah.
So we've now got these two go-to-markets. There's the direct model, and we couple it with these integrations where we also have direct relationships with the client, but we're embedded in their back-end systems.
Right, absolutely, much more sticky and
Yeah.
And the other thing I guess that I take is, because it's not so easy to integrate, it also means that companies are less likely to ever pull that contract because it's a lot of work for
Oh,
them
yeah.
on both sides.
Yeah,
So,
I mean, when we look at the last 6 months as an example, we've signed a series of wins, which are all 1 to 3 year contracted revenue streams. So we're really pleased with that shift, and it adds further recurring nature to our revenue stream.
yeah. And if I'm asking, COVID, how has it affected the business? Obviously, there's a lot of uncertainty with what's going to happen with COVID. You know, in here in Melbourne, we may even go to stage 4 for all I know.
Yeah.
I'm just curious, how has it affected the business thus far?
Yeah, we did have some impacts. I'll sort of, we can pretty much microcosm that little
Yeah.
window quickly. So Australia and New Zealand, we were really lucky to have the benefit of, it happened offshore.
Right.
Over 6 months preceding it arriving on our shores in Australia and New Zealand. So we could see it, by the time we got into January, February, it was becoming newsy. And so we started preparing. By the time we got to mid-March, we had ceased all internal travel to absolute necessity only. And we prepared to have the workforce go fully remote. So full work from home. So when the Australian and New Zealand governments announced that they would shut down big portions of their economy and require companies to work from home, we transitioned to that within 3 days. So we got that done. And that, you know, we were able to do that on the back of years of tech investment, migration to the cloud, and adoption of technology across the workforce. So that worked quite well. And then we had to deal with look, this thing is therefore going to have impact in all these different industries that use us, hospitality, right the way through to mining and everything else. So we really had to take a close look at, okay, there is no real precedent. What are we going to do? So we looked at it and we said, okay, we need more flexibility in our workforce. We need a strong balance sheet as we exit this thing. And we need to keep our teams together. Paramount, we have to focus on workforce safety. So we did our workforce safety things. Then we went through a series of moves. The first move was to examine how we were positioned and say, well, there's a big chunk of this growth positioning that we need to take off the table because we don't know what's going to happen in this economy.
Sure.
But one thing we can say is there's not likely to be a lot of hiring in the next month or so.
Right.
Right. So we pulled back some resources that we positioned, took out 13 people in that, and some people got hurt, and we're pretty unhappy about that, but we had to do it to preserve the rest of the business. So made that move early. The next move we made was say, okay, how can we preserve cash and how can we get flexibility from our team? So the board and executives made a decision together that was voluntary to take a 50% cut in paid hours, which is substantial.
That's huge.
And we did that for 3 months. We agreed that it would not be deferred, that we would sort it out later, basically. And so we made that call. We communicated that to our teams. And then we asked our teams, as we got another week in and we calculated all the numbers, we asked our teams for a voluntary 20% from them as well, which they matched. So that was great, whole workforce. So we had a big chunk of costs out for permanent employees and casual labour. Then we had some temporary moves, which were executive and board, that was 50% of their pay, and then a further 20% for the full remainder of the workforce. And those 2 moves, the latter 2 moves, were for 3 months each. And we would sort it out afterward. So by the time we got to the beginning of May, we had taken out costs equivalent to buffering the company for a 50% fall in revenues, should it occur, right? Now, the great news is it didn't. We saw in April a 24% dip on the year prior, and in May a 35% or so dip on the year prior. And then in June, the recovery started. Why? Because Australia had shut down, New Zealand had shut down. We got preparedness in place so that we were able, at a government and community-wide level, to see that we weren't going to overwhelm our health system. And so the government started relaxing conditions across those two economies and in the various states. So what we then saw was, as government assistance and various other measures kicked in, and we saw that COVID was quite contained, a recovery took place. Hiring re-emerged. And so we've seen since sort of early June, a real pickup in our revenues.
That's great.
To the point where we're setting numbers where it's the inverse of what happened at the entry of COVID-19.
Incredible.
So really quite a big dip. So we're coming out of that now, but the issues that we now need to deal with are, there's still volatility in flow and there's increased uncertainty. But I think the way the two governments are working, Australia and New Zealand federally, they're planning really well, and they're broadcasting it far enough in advance that I think that a lot of the uncertainty is being contained. And so we're seeing that in the way that our order flow is working out. So we're now back we've brought back several casual workers to handle the load. We've released a lot of technology spent to automate some new product flows that we're seeing taken up. And yeah, we've gone quite well through it. It's been interesting times, but yeah, all credit to our teams in the way that they responded to this. They were very flexible. They've been a really tight-knit unit in the way that they've worked, and they really embrace working from home and some of the fun that you can have with it. So yeah, we sailed through it. It's been great. Yeah. Great capability demonstration.
Anyway, right, we don't have much more time here, but I just want to say, it's fantastic. Thank you for the overview of the business, the industry, and also how I think that we can see post-COVID, how your numbers you're saying have picked right back up, and it shows you the strength of the business model itself, that it's here, it's to stay. We can't say what's going to happen with COVID, obviously, but we know that the business, it will well and truly emerge. Rod, thank you very much for your time. We really appreciate it.
My pleasure, Greg, and keep up the good work. We'll see you again soon.
Okay.